quick extra second. Okay. I think this should be picking up what I want to pick up. Let me know in chat if you can't see the screen. Because I've never recorded this way. I'm sort of going in reverse out of Discord. Yeah, we'll make this quick and simple because there's one major thing to talk about. I don't want to get too into the weeds. It's getting late, and I don't want to talk about too many individual things. We'll just keep a nice big macro view, mostly the weekly macro view, and talk about that inauspicious signal that's maybe coming up. So here we are. We're just on ETHUSD, and here on the weekly chart, and you can see I've got two circles down there at the bottom in our momentum oscillators, the Stoke RSI and just the standard RSI. And what's particularly of note is that this week, if nothing were to change, or if momentum continues to kind of just blah throughout the rest of the weekend, you'll see down here on the RSI, on the weekly, ETH is going to cross below the 50, meaning into bearish momentum officially. And historically, it's not a great sign when it happens on the weekly. And let me show you why. Let's pull back, pull back, pull back. I'm actually going to take off the moving averages and clean this up as much as I can. I've got a lot of lines, I know. So here we go. Here's the last time the weekly RSI crossed below 50 into bearish territory. Suffered roughly, well, yeah, you all know. It's summer 2022, went down 70% before we bounced. Not too great. If we go back a little bit further, we've got, prior to that, we had a cross down on the weekly through 50, the first week of January 2022. And yeah, before we saw any kind of bounce, we dropped 43.5%, almost 44% if you round up. Again, not too great. So what I'm trying to illustrate here is that crossing below 50 on the RSI and going into bearish on the weekly is pretty inauspicious. It's pretty bad. I'll show you in a second, but the chart shows that it's typically a minimum of 45% drop, or somewhere around there. Now, as I pull back, I'm gonna show two exceptions so that we can dive into those and make sure that we have all angles covered, because it is important. Because the very next thing I'm going to show you is one of the exceptions. This should look very familiar to everybody. This is summer 2021. This is the Fed balance bounce. In summer of 2021, we crashed out of May from the Elon Musk announcement and any number of things. This was, as I've said multiple times, May 2021 was supposed to be our peak as far as retail involvement and funding and inflows to crypto. You can see that confirmed down here on the RSI. This should have been our peak by all rights, or at least somewhere around here, 4,400, due to the unbelievable amounts of QE from the Fed, and they're adding to their balance sheet. We had a second wind, and we got an enormous, higher high with lower high RSI. It was a gigantic, 3 drives to a high, and the market would collapse afterwards. But anyway, I want to talk about specifically the RSI crossing below 50 on the weekly. It did it twice in that summer 2021 period, and it did it barely, and I mean barely. In the week of June 21st, we saw RSI drop to 49.69, so that's nice, 69. 0.31 below 50, and it did it once again on a bounce to 48.22, so a little bit further down, but just hardly below 50, and they both bounced back. But again, keep in mind what was going on during this time. ETH had been in had been in a bearish momentum, not a bear market, but it had been in bearish momentum, or had set lower lows, basically for 4 months at that point. Just to compare that to potentially this week, if we go under, we are just now seeing bears take back control. If it happens, we are just now starting that. Could that be 4 more months of, at the very least, sideways, possibly down action if we cross under? It certainly seems possible. The other thing that was going on, obviously, during summer 2021, was the Fed. Oh, geez, do I have this backwards? Fed Fed balance. Oh, resbow. Almost had it. So yeah, going back to summer 2021, you had the Fed just absolutely juicing the market and buying everything they could, taking their balance sheet to historic levels. They bought back, almost half a trillion. They'd already bought trillions, and they were buying another $500 billion, which is what gave the market its second wind. So again, this is that summer 2021, which is part of the reason why I think we did not completely capitulate, dropping under RSI 50 on the weekly. Going back a little bit further, we can see again here, week just before the COVID plunge. We've talked about this before. The COVID drop, the intensity of it was absolutely warranted, a true black swan event, a worldwide calamity. But the lead up to it was foretold. The markets started dropping. If you were paying attention, NASDAQ and crypto started dropping end of February before anything shut down for COVID. And you can see that here. And just a week before is when our RSI crossed down into below 50. Just like that. And we reached a bottom of, hard to tell exactly where this should have started because I don't remember where the starting value was before the announcement of COVID, but roughly 50. This says 55%. It was probably a little bit less from the actual COVID announcement part, but just to show it's around 40, somewhere between 45 and 60 is probably pretty fair there. Go back again. Prior time we crossed below 50, summer of 2019, which is what I've likened this summer to quite a bit. If the 4-year cycle, as silly as it has sounded before, is it holding up, as ridiculous a theory as it might seem on the outside. So 4 years ago, July 2019, ETH first crossed below on the weekly at 50, went down to 48.47. The week of July 22nd, 2019, it recovered just barely. So keep in mind, so it crossed under, tried to break back upwards the following week, got to 50.35, and then just continued back down under, and never got above. It tested 50 one more time in September, but ultimately failed. I wouldn't even really count that as a cross up. So you've got a drop from that week down to the bottom of 47%. So we're seeing these numbers a lot: 45, 47. COVID drop was debatable, but somewhere around 50. Let's go back another one, November 2018, which was really the end of the bear market. So maybe we're in the end of the bear market now, as I've been saying, but remember, the first wave of a bull isn't crazy. It's not parabolic, and it's not a whole lot of fun. The first wave of a bull, which I think we are entering, is a lot of sideways, couple of surprise dips too. You have to build out that base. Case in point, here's the end of the bear market in 2018. Actually, I don't know why I marked this. This is incorrect. Was I measuring something here? I think this is an old line. Man, I wish TradingView had time. Okay, so let's ignore that one. Go back to the real example over here, which is May 2018, which is just after the bounce from our initial bear market capitulation. And you can see Ether crossed down below 50 on May 21st, 2018. And did not have any meaningful bounces until, 88%. So that's certainly the worst case scenario, and I don't think we're looking at an 88% drop. And just before we move on, so you don't think that I'm ignoring a line, this line is just in the wrong place. There's nothing to do with an RSI cross here, so it's old data. I'm not ignoring an exception here. At the end of the bear market, like I was just discussing. So anyway, so that was May 2018. And before that, this is before the bounce. Before the drop and the bounce, coming off of the initial 2018 capitulation. In March of 2018, we crossed below 50 during this week. And ultimately, it took a drop of 58%. Before any meaningful bounce. And then, of course, that bounce got rejected, which is a whole different story, whole different side of TA. But, that would lead into the May drop. And then, of course, we have to talk about the last one, perhaps the most important one. This is when I joined Ethereum back here, was the first exception to this rule. And it's really eye of beholder stuff here. So let's go back to lovely January 2017. Probably when I probably when I met the ETH Finance crew. And here at the very, very beginning of ETH's beautiful first bull run, the week of January 9th, took a slight dip below 50 to just 47.81. Now, keeping in mind, there was almost no volume on Ethereum at this point. It was just being discovered, frankly, everywhere. It was nowhere near mainstream. Exchanges were just getting used to it. In large quantities, that is. And so I think with the lack of volume and just, frankly, the age of discovery coming in, this dip was quickly reversed. And we went on to do that magic. Yay. Look at that. What a lovely time that was. So here's an exception. Was Ether did drop below 50 on the weekly RSI in January of 2017, and didn't really matter. It was a complete exception to the rule. It also didn't drop. No, it dropped meaningfully below. It dropped, 2.20 below it. So there's two exceptions to this. One is literally the beginning of ETH's, entire bull run in the public eye, if you're not counting the ICO. And the other exception is the massive balance pump, from the U.S. Fed, which is the summer of 2021, a period in which bears were very much in control and putting a lot of pressure on it for months at that point. And so it kind of made sense as well that it would go up, just to punish people. At least that's my reasoning behind why it's an exception. So as we cross down, potentially back below 50 this coming Sunday into Monday night, keep an eye out, because are we going to see another exception, or where would if we cross back below, what's a 45% drop? I'll tell you what, before I do this, close your eyes and take a guess where 45% drop from here takes us. Do 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 do. 45% takes you to, okay, it wasn't exact, but looks like just below, like 975, 970, which is of course right. Screwed that up. Right near the summer 2022 bottom. So somewhere around there, you can imagine. Wow, brings us right back to 1,000. Isn't that funny? So I said before, it would not shock me to see a revisit of this zone, even though we are in what I believe is the first wave of the bull market. But the first wave is not fun. The first wave is building out the foundation from which to launch from. Or we make an exception. And you know what? I'm going to be right here to check that out too. If we make another exception to this, boy, would it be fascinating. There's a lot of weirdness in the charts on the weekly, but we'll save some other odd things for maybe another one, because I want to quickly touch on Grandpa Bitcoin. Also dealing with RSI. This one, because Bitcoin's dominance tends to go up in bear markets, because it alongside Ether is where most alts are going to dump to in times of turmoil. Thankfully, ETH is also a valued asset. As you can see, our ratio is more or less holding up better than it ever has before, although more on that in a second. But because Bitcoin dominance often increases and holds its value steady a little bit better than some altcoins in bear markets, instead of looking at just the raw where does Bitcoin cross under 50, because it bounces a lot, bounce, and potentially a bounce from last week, which protects its value for a little bit longer before true dumps. Instead, what I was finding a pattern with is the rollover on the slower average. And so you can see those marked by these vertical blue lines, and my lovely text, the RSI roll up here. So the last time that, I'm just using these terms concave and convex. So the last time that the Bitcoin weekly RSI rolled over from upwards to downwards, concave, was May 2022. Pretty nasty time. Taking a sip, actually, 1 second. Excuse me. And so here we saw Bitcoin started to roll over. You saw its value went down from 44.53 to 44.41, and just with that action, crossed below the this line of support, resistance and support, and dropped, let's see, 50% until its first bounce later that summer. Going back a little further, this one's more obvious. Bitcoin, in fact, rolled over, obviously, in the middle of November 2021 when the bull market came to an unceremonious end. I don't need to show you the numbers here. It dropped. Sorry, it dropped a lot, 50%. Prior to that, this was, for Bitcoin, what probably should have been the top of the 2021 market if the Fed had not stepped in and started pumping money into everything and inflating the entire planet. Bitcoin rolled over in late February of 2021, and even though it would go up a little bit higher, so if you really wanted to trade it, you had some closes at 5% up, and you had a couple of stingers up 13%. Ooh boy, you could have risked it. But if you didn't risk it, probably felt pretty good, because after that rollover, it would drop a maximum of 48% and to a close of 45%. Hey, there's 45 again. 45% before its meaningful bounce in the end of 2021, second half. Prior to that, these are much smaller, and again, as we're going back, these felt bigger back in the day because Bitcoin's price was much lower prior to the COVID pump. But here you can see, this one I don't want to harp on, obviously, on whatever it was, COVID Thursday or whatever. Bitcoin obviously plunged 30%. That one we'll leave it aside. We don't need to discuss that. We all know why it happened. Ooh, helicopters. Oh boy. One moment. Okay. So prior to the obvious, the COVID drop we had back in August 2019, which was the summer top of the bear market rally. In 2019, Bitcoin rolled over from, 72.5 to 71.78, and would drop, depending on how you want to call it, either drop 32% before it got an okay bounce, or it dropped about 40% until it started to really form the final base of 2019, which is kind of what I've been discussing. The first wave of a bull is going to be forming that base. COVID plunge aside, you can see how this could have kept going and formed a nice base if it had stopped at, say, 7,000 or 8,000 or 9,000. Obviously, COVID had other plans for it. And this continues if you keep going back. But so yeah, instead of tracking raw RSI values, I was tracking the average for Bitcoin. And yeah, let's go over here to the whole point of this week. Even though Bitcoin is looking to bounce off the RSI here, it looks like it's back up to 52, so a small bounce, still lower highs all told, and perhaps more importantly, it is entering full bearish control on the RSI, stochastic. But at least for the purposes of this video, it is at risk of rolling over if it drops to, back below 26,000 by Sunday night or Monday. It has since recovered, but it's oscillating back and forth. It has turned concave overall since this is basically an extremely long curve that has had kind of ups and downs. So here's back in April is when it went down for the first time, back up, back down, 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 up. So it's fighting, and I don't think we need charts to tell us that crypto is fighting for its life right now, to hang on to these values, because if it doesn't, Bitcoin revisits, easily, 22K, sure, 20K, probably, possibly even, that 18,950 number over here, which was really good. That would make for one hell of a great base going into its own bull market. It's what I think is its final bull market. And but it's fighting for its life. And so again, this week it has, due to this last minute pump that we saw earlier today, possibly on the BlackRock ETF news, which, every cycle there's always an ETF and there's always a rejection. I'm sure it'll be more of that. But we know that it's not actually based on the news. The markets will find the news. Here we see Bitcoin has been fighting for, probably it'll be 3 months by the time it actually fully rolls over. So keep an eye on this. It has not completely rolled over yet, obviously, but it's very much in danger of doing so. And I think that should do it for today. Just wanted to do a quick one. We can quickly take a look at SPY, which is doing much better than crypto. I do think that the bull market is in fact starting. I called it for us about a week before mainstream outlets started to, because my system, which is the true higher highs, true higher lows, or true lower lows in a bear market case, but for a bull market, true higher highs and higher lows. We saw that on the Stoke back on, when it gapped up about 2.5, 3 weeks ago. So yeah, we do believe that the bull market is starting for SPY. It's doing everything it's supposed to be doing, putting in higher highs. Obviously, today's was a bit of a cool off, because it's just been soaring off the backs of like tech stocks, Nvidia and Tesla, and whatnot. But there's no real danger of it re-entering any kind of bear leg at this point. It would take a pretty gigantic fall for it to do that. So it's time to cool off. It was just about to enter overbought territory on the weekly. It has been overbought on the daily for quite a few days now. I think, pretty much all week. Yeah, so basically 5 full trading days, and that tends to be the top of any given leg. It was for the FOMC in 2022. Down here, you saw that the SPY was overbought, so we went down. Prior to that, the last time it was overbought was in, November 2021. It actually had a little bounce, and then it went down, into December. Here, overbought, went a little bit up, and then down big time. Overbought back in April 2021, big time down, which was, first week of May. We all remember that. So it's just to say that, overbought, even on the daily for SPY, is typically at the top, and it's okay for it to be at the top here, and for us to still be pretty darn bullish, because it already put in a higher high on the weekly, a true higher high on momentum and in price. There's nothing to really contend with. There's no bear divs. There's nothing to say, except SPY is just in full-on bull mode. So it'd be nice to cool off here. It can preserve its upward channel if it does something as simple as revisiting, like I think 397, which I have had on my chart, 398 for. I mean, if you've been following me, guys and girls, we've had these lines on our chart for like 2 years now. So you should not be shocked by these numbers, and you should now believe in these numbers and why we choose them, because they just make sense. Clearly, they keep touching these damn lines. I think, SPY coming down to retest 398 might actually be a little too low now. Although it wouldn't be the end of the world. If it came down like next week to 398, then yeah, it would, that would be a pretty I'd expect a pretty violent bounce off of it, preserving this sort of upward channel here. And again, I believe in our system better than any lines, so it could be that this is over here, or maybe it takes a little time and it gets to one of our other major milestones, 412 or 415, something like that. But it's just to say the SPY, as I said in Bitcoin, Jesus Christ, in Discord earlier. 443 was my stop. It is a massive resistance. I mean, going back to the bull market, it was a support, a resistance, back and forth, tons and tons of volume. It was a rejection here in April of 2022, and as you can see, SPY bounced off it, rejected it beautifully. Here's it on the daily. You can see it. There's 443. It's been a line on our chart for 2 years now. Rejected off it. Today, confirm the rejection. Looks like, was this a dark cloud? Yeah, that looks like a dark cloud. It's right on it. Oh, isn't that amazing? Isn't that funny how numbers work? It's literally right on the halfway point. Technically, for a full dark cloud, you're supposed to go at least past the halfway of the candle, really 2/3 down the candle if you want to be certain. So this is prime for a fake out, actually. If SPY wants to continue on, and the next target, aside from, whole number 4450 on the SPX, aside from whole number 4445, is the line of doom. So with this fake out dark cloud, which isn't a real dark cloud, SPY could continue up next week, and it wouldn't really shock me. I think there will still be a move down, and I would expect it to test at least 420, test this gap, 422 when it comes back down, if not, 415 or maybe even below. It can go all the way back down to this channel if it really wanted to, freak everybody out, if I could drop to 405, 407, and still preserve this pretty big bull market leg that is developing, or bull channel, I should say. But again, with it being sort of they've lined up the fake out, it can certainly go up to test, again, 445 or the, let's get rid of this so I can show you the actual line. Our famous line of doom. Oh boy, isn't it funny how we keep coming back? Look at these bounces off of it. Look how it just cuts through. Just cuts through everything. And where's that line of doom from? 2002. Yeah. It's a doozy. So, yep, it can continue up to, again, 445 or even, this just big round 450. It's also the line of doom, and it'll have a big test there. So, that's pretty much it. Just big macro stuff. Tried to keep it to the weekly or the monthly, but mostly the weekly for ETH, BTC, and SPY, the big ones. We don't need to touch tech right now. That's pretty much the news. Didn't even touch DXY. DXY has, if you want a quick thing, it has put in a true lower high, which means the dollar bear is probably coming soon. There can be a bounce, which will result in that SPY drop, that we were just talking about. But for the most part, dollar is entering a bear, which means good things for equities and crypto. VIX, same thing, just lower lows like crazy. VIX is absolutely smashed back to 2018, 2019 levels. So again, a spike is probably coming, which again could be this SPY retest. It could be just crunched all the way through until the Fed rate dump, which is in over a year or a year and a half, maybe even 2 years from now. But everything is saying bull. It's just about what does a bull look like. SPY has put in a much more obvious bull, the first leg of a bull, and I think a nice summer cool off is probably due. Crypto is, I think, also starting the bull. It's just we have to remember, and it's important to remember that the first stage of the bull is not fun. It's not parabolic. It's not 3x gains within a week. It is this right here was the first leg of the bull. The end of the 2018 bear market was this. And after everything during 2019 was forming this base, look how many times we touched on this. Even just this line that I'm not drawing anything. I'm just literally showing you roughly the zone. Look how long we spent there. And that's what the first leg looks like. It's not fun, but I do think that's what we're in now. I think flat with a couple of surprise dips and a couple of surprise pops are generally what we're looking at for at least a few more months, especially if this cross down happens. So, looks like nobody's viewing live, so I have no friends. That's totally fine. I'm comfortable with myself. But do feel free to hit me up with any questions, comments, and especially concerns and criticism, because I thrive on criticism. I don't ever want an echo chamber. I want to be challenged. Please comment on that when I post this video. Thanks for watching. Take care.